Good morning, good afternoon, good evening, traders. This is Ed FX Trader for another video today, Monday, May the 11th, 2020. So what I'm going to be doing is that I'm going to be starting a series on simple forex trading strategies. So we're going to be looking at some simple forex trading strategies, and we're going to be identifying different strategies, and all that I would say to you is to find a strategy that is easy to understand, right? Easy to execute, easy to obey, and that you can repeat that process over and over and over and over. Now, this is going to be so simple that it is actually going to shock you. So this strategy is going to be focused on the stochastic oscillator. But this particular stochastic that I'm going to be using is a multiple time frame stochastic. So let me introduce you firstly to the stochastic oscillator. So right here on my screen, right, is the stochastic oscillator on the weekly time frame, and we're looking at the pound versus the Australian dollar currency. And what we're focusing on is that I want you to understand how the stochastic oscillator works. Okay, so generally, and this indicator is on every MetaTrader 4 platform, right? If you go into oscillators, you will see the stochastic oscillator here, right? I'm using a special one which I will provide in my free Telegram channel, right? That will be in the description, in the link in the description below this video, right? So if you join the free Telegram channel at the end of this series, I am going to be providing this indicator. Okay, I'm going to be providing this indicator and any other indicator that I believe will be of value in trading this strategy. All right, so this is the stochastic oscillator. Okay, and what we're going to be doing is that we're going to be using this particular oscillator for the strategy. Okay, and the strategy for the settings, let me firstly go to the settings, okay, is that we're going to be using a K period of 8, a D period of 3, a slowing period also of 3. We're going to be using the exponential moving average, right? So the indicator will be using that moving average, and the price feed is that we're going to be doing it on a closed candle. So we select one here. So all of this will be provided in the when I provide the file, right? Everything will be in the description below this video. So we're using 833, then we're using a 1 here and a 1 there. Okay, and that's all we're going to be doing. Now I want you to understand firstly how the oscillator works. Okay, so the oscillator divides, there's a buy zone section and then there's a sell zone. Okay, so when you go into the settings of the oscillator, the levels that you want are 20 and 80. Okay, you want the 20 level and the 80 level. That's the only two that we are interested in, that we're going to use. Okay, once we have that, you can make it whatever color you want, whatever width you want. I am using blue for this demonstration, and these are the settings as made mention before. So what we are after is, first of all, understanding how the indicator works, and this is going to be this strategy is going to be indicator based, right? We're keeping it very simple. Let's say you have no technical analysis skills. If you have technical analysis skills, of course, it will make it improve the strategy. But let's say you have no knowledge and you want a simple strategy, something that is easy to understand, that can give you direction as to where you should buy, or when you should buy, when you should sell, and when you should get out. So it works like this. The indicator, right, has a buy zone and a sell zone. So below, whenever this blue line, whenever the oscillator is below the 20 mark, we're only going to look to buy. And when it is above the 80 mark, we are going to look to sell. It's as simple as that. No matter what. Below the 20, we're going to look to buy. Right? Above the 80, we're going to look to sell. And this is on the weekly time frame. So how does this work? Let's see. When the indicator, and all I'm going to do is just drop in it, when it was above the 80 line here, we said that we will look only to sell. And as you can see, the market went down. See there? We went down 1, 2, 3, 4, 5. Or 5 weeks, it went straight down. Okay? When the oscillator is below 20, we are going to look to buy. Right? And as you can see, it went up from there. And right here was where it went down. Okay? Again, when it is above the 80, we are only going to look to sell. Even if it is continuing to go up, before it actually turns and start going down, our focus is only going to be selling. So once the oscillator reaches above 80, just focus on selling. Wait for the sell confirmation and begin to sell. And once the oscillator is below the 20 mark, wait for the buy and only focus on buying. Now, you are going to get out of the trade. You will stop buy. We will stop buying once the oscillator moves from the buy zone up to the sell zone. Once that happens, buying, we are finished buying. And when the oscillator is in the sell zone, right, and we're selling the market, we're going to sell until the oscillator reaches into the buy zone. Once it reaches into the buy zone, selling, we're finished selling. We're going to stop selling, regardless of whether it continues to go down into the buy zone. When it reaches in the buy zone, whether if price continues to go down, even though the indicator, the oscillator, is in the buy zone, no matter that, we are going to come out of the trade. So essentially, all we're doing, when the oscillator on the weekly time frame is in the buy zone, we're going to buy until the oscillator reaches the sell zone. And once the oscillator is in the sell zone, we're going to only look to sell until it goes back into the buy zone. Then we are finished selling. And that is as simple as how this will work. Okay, so the weekly time frame, this is how this will work. When we have the oscillator and the weekly time frame, that will give us a directional bias. Okay, so when the stochastic oscillator on the weekly time frame is in the buy zone, we're only going to be focused on buying. So our direction for trading is up. We're going to buy. And when the oscillator is in the sell zone, our bias is going to be to sell. Okay, now just say this: there is no perfect system in forex trading. There's no holy grail. So you're going to notice that sometimes it works, sometimes it doesn't, but I can guarantee and tell you that this works majority of the time, and you can test this for yourself. Okay, you can test this for yourself at any time. Open your MT4 platform, bring up the stochastic oscillator, change the setting to 8, change your price field to close, choose exponential moving average, and go ahead and click OK. Right, put your levels will already be there, and just look at it on the weekly time frame. How price moves very close with the stochastic oscillator on the weekly time frame. So the weekly time frame will give us direction. Now, if the direction is to buy, okay, as a universal principle, whenever we are going to buy, we want to buy at a low price. And whenever we want to sell, we want to sell at a high price. So what we're going to be seeking to do is, when we get direction from the weekly time frame, okay, when we get direction from the weekly time frame, right now, right at this point in time, this market is in the buy zone. Okay, so we know on the weekly time frame the pound Australian dollar is currently in the buy zone. Then we are going to go to the daily time frame to get high prices and low prices, right? Because if we want to buy, we want to buy low, and if we're going to look to sell, we want to sell high. Now, at current market price, the stochastic is in the buy zone, so we're going to only focus on buying. Then we will go to the daily time frame, and what we want is that we want the daily time frame to also be in the buy zone. When the daily time frame is in the buy zone, that gives us a low price. Okay, that will give us a low price. So let me recap. On the weekly time frame, the stochastic will give us a directional bias, whether we should buy or whether we should sell. Then we move down to the daily time frame to tell us whether we're at a high price or whether we're at a low price. Now, if the weekly time frame, right, says that we are going to buy, as you can realize, from this period in time to right here, we have been in the buy zone. If the stochastic on the weekly time frame telling us to buy, when we go to the daily time frame, we want the daily time frame stochastic to be in the buy zone as well, right? When it is in the buy zone, that will give us the low price. So this period from this pink vertical line to this pink vertical line was when we were in the buy zone of the weekly time frame. Now, when we go to the daily time frame, we are only waiting or seeking for the daily stochastic oscillator to be in the buy zone. So right here, this first vertical pink line here, we were not in the buy zone, so we wouldn't begin to look to buy, right? And I'm not saying to jump in the market buying, right? Because this is a multiple time frame analysis strategy, right? Where we will go from the weekly time frame to the daily time frame to the 4-hour time frame, for which we will place our entry. Now, when we get the direction from the weekly time frame and we go to the daily time frame, we want the stochastic oscillator to be in the buy zone. Now, that the stochastic oscillator entered into the buy zone, right, from about here. So I'm going to mark this blue. And we are still, right, we were in the buy zone there, all the way up here. And then we got the buy opportunity. And then the stochastic oscillator went into the sell zone, so we would stop, right? Because now we're at a high price and we want the stochastic oscillator to go back into the buy zone to give us back a low price. Okay, now let me go back to something here. If the weekly time frame is telling us to buy, okay, if the weekly time frame is telling us to buy, and when we go to the daily, right, because the weekly time frame is saying that our focus should be on buying. When we go to the daily, and if the daily stochastic oscillator is in the sell zone or near the sell zone, we are not going to look to enter into the market, right? We want all the zones to match up. Okay, now we have the weekly time frame in the buy zone. We have the daily time frame as well in the buy zone. Okay, so what we want now is that we're going to go to the lower time frame, which is the day, which is a 4-hour time frame, and that is where we're going to look to enter into the market. Now when you go to the 4-hour time frame, again, your focus is on buying. Okay, now when you go to the 4-hour time frame, any indicator that you want to use, or if you have technical analysis skills, okay, that can tell you that is no time to buy, then go ahead and buy. So when we come down to the 4-hour time frame, I have this indicator here that I drag onto the screen, and whenever it turns to blue, I'm going to look to buy. If what I want to do is to buy. And whenever it turns red, if I was looking to sell, then I would sell, right? So right now I have my indicator on my 4-hour time frame, and I know that my focus is only on buying. Okay, so when this indicator turns from red to blue, I am going to begin to buy. Okay, I am going to begin to buy, and I am going to buy this market, right, until I either get stopped out. If it turns to blue, I'm going to place my stop down here below these lows, and then I'm going to begin to buy, and I'm going to buy the market, right? I'm going to focus on buying until the stochastic on the weekly time frame goes all the way up into the sell zone. Now, if I want, because this was a buying opportunity here, when we are in profit, we're going to move our stop loss into profit so that the trade becomes risk-free, and as the market moves in our direction, we will move our stop as well. Okay, you can use a trailing stop, or you can manually move your stop. All right, when it turns to red on the 4-hour time frame, you can either close out the trade and take your profits at that point, or because you are moving your stop loss into profit, if the market reverses, it will hit your stop loss and you will still exit the trade with a profit. Okay, when this market was going down, if you will notice here, it was going down and going down, so you can be in a trade for a long period of time. Okay, and when this was like 665 pips, okay, and then when it turned blue here, you could come out and then look to re-enter when it turned back red, or you could just continue to move your stop down as the market was going down, right? So this pullback probably wouldn't have affected you, and you could get back into the trade, right? So when I do another video, we will explain in more detail how this strategy works. Now, the good thing about this is that it has consistency to it. Okay, it has consistency to it, and you can notice this on different time frames. All right, so I'm going to take this indicator off. If you do not have this indicator and you have, you know, a moving average, any form of moving average that you want to use, any indicator that can tell you when to get into the trade buying or when to get into the trade selling, you can go ahead and do that. If you don't like using indicator and you have your own technical strategy, feel free to go ahead and use that. But just about any indicator, here is a moving average. All you do is just drop it on, sorry, not that one. Is this the one that I want? No. Any indicator, let me find, there should be several indicators over here that we can use. You can use a MACD if you want to use the MACD. You can use a custom moving average, right? Where you can put whatever period you want, whatever moving average type you want to use, and just drop it on the screen. And if you're looking to buy, when price closes above this red line, then that would be your indication to start to buy. Okay, so right now, if we're looking to buy, price close above this red moving average, then you begin to buy and you put your stop below these lows right here and you begin to buy. You will enter the trade. So you can use any form of indicator that you want to use. You can adjust the settings, okay, as you see fit. You can adjust the settings, and as you adjust the setting, your entry point will be adjusted as well. So let me recap what we have done so far. Okay, so we are using the stochastic oscillator to develop a trading strategy. And what we have identified with this oscillator is that on the weekly time frame, okay, it can give us good directional bias as whether we should be focusing on buying or selling. When the stochastic oscillator is in the below the 20, when it is below this 20 dotted line, we want to focus on buying. When it is above the 80 dotted line, like over here, our focus is going to be on selling. And all we have to do is patiently wait for the sell. You notice here, the market did not, after it went down for 1 week, it then started going back up. But then here was a sell-off when it just went all the way down. So sometimes it can be delayed, but I tell you, if you will focus on that, it will work across the board, right? If I go to a different time frame, let me just go. This is the Aussie, New Zealand dollar. Let me just clear up this. And I want to prove to you that this works. Okay. On the, here it is. When it is in the buy zone, we bought, the market went up. When it is in the sell zone, if you sell, the market went down. And you see this over and over. It's in the sell zone here, then the market went down, right? When it reached the buy zone down here, the market went up. When it up in the sell zone, if you just sell, the market will go down. Okay, so you get your direction from the weekly time frame, right? So you're using the stochastic on the weekly time frame to give you direction. Then you will go down to the daily time frame to get your low prices and your high prices. And what we want to see on the daily time frame is the stochastic to also line up. Because we want to buy low, so we want the daily stochastic to be in the buy zone as well. Okay, and when we're looking to sell, we want the stochastic and the daily time frame to be in the sell zone. Once you have that lined up, then you will go to the 4-hour time frame, and that is where now we're going to begin to look for entries. Okay, we're going to begin to look for entries. Once we have that set up, you just go to the 4-hour time frame, pull out any indicator such as a custom moving average indicator, and just wait for the opportunity, right, for price to meet that indicator's requirement to buy or to sell. So even right now, let me carry this to current market. If we move to the weekly time frame, you will see here that on the Australian New Zealand dollar on the weekly time frame, we are in the buy zone. And if you go to the daily time frame, the daily time frame is not quite in the buy zone as yet, but by the time market closes, this will end up being in the buy zone. So these two things will line up, and all we will do is to go to our 4-hour chart. On our 4-hour chart, we will pull out this indicator, right? This is the one that I use, and I will just drag it on the stream. And all I want to see is for this to turn red. Once this turns red, then like for instance, when it turned red here, I'm going to look to sell, and then my stop is going to be above the recent highs. Okay, and if I'm risking, let's say in this case 55 pips, then I am going to go for twice that amount. Okay, so we always want to have at least a 1 to 2 risk to reward ratio, right? So we'll go for 110 pips. Whatever we're risking, we want to go for twice that amount, right? And that is how the strategy is based. Very simple, not anything complicated. Now the good thing about this particular indicator, I will go to a different chart. The good thing about this particular indicator is that it is a multiple time frame indicator. What does that mean? It means that I can stay on the 4-hour time frame. Watch what I'm going to do clearly. As you can see, this is a 4-hour time frame, but I can pull in data from a higher time frame or from a lower time frame while I remain on the 4-hour time frame. Now, because our strategy is based on the weekly, the daily, and the 4-hour, I'm going to stay on the 4-hour time frame. I'm going to get my multiple time frame stochastic. I'm going to pull it in the same area here, and I'm going to drop it. Then all I'm going to do is that I'm going to tell it for the time frame when it changes from 0, and I want to bring in the weekly, and the weekly, right, is 10,080 minutes. So I just type 10,080 here. I make sure that my method is exponential and that I'm using closed charts. Okay, I'm going to since I already have the buy levels and the sell levels, I'm going to change that so that I don't get confused with my colors. I'm going to change this one to red. Okay, I'm going to change this one to red. So what I'm doing is that I'm bringing in the weekly stochastic onto the 4-hour time frame. That is what I'm doing, and then I click OK, right? And there we go, right? This red line here represents the weekly stochastic. Okay, and then I can do one more and bring in the daily stochastic. So I'm going to go here again. I'm going to change this to 1440 because that's what it is for a daily. I'm going to go down here. I'm going to change the setting to 1. I'm going to also change this to 1. Okay, and I'm going to click, I'm going to delete these levels because I already have it on my chart. And then I'm going to change the color to, let's just say I'm going to change it a nice color. I'm going to change it to purple. Okay, I'm going to change it to purple, and then I'm going to click OK. So on the 4-hour time frame, I have the red line that represents the weekly stochastic. I have the purple line that represents the daily stochastic, and I have the blue line which represents the 4-hour stochastic. Now I'm going to go and we're going to see the beauty of this system. Okay, we're going to see the beauty of this system. Here am I on the 4-hour time frame, And then I can see here, I'm going to zoom in so we can get enough chart. I can see here, okay, I can see here that my weekly is in the buy zone, and my daily, which is a purple line, is also in the buy zone, and my 4 hour is in the buy zone. Okay, now just by the weekly and the daily being in the buy zone, I know because the weekly is in the buy zone, that's the red line, I'm going to be focusing on buying. Because the purple daily stochastic is in the buy zone, I know that I'm at a low price. That means that I can look to buy low, right? And I'm on the 4 hour time frame, right? And the 4 hour was also in the buy zone. So this was an excellent opportunity to look for a buy that will give you 320 pips, okay? Or as I said before, right, you don't even have to have the 4 hour stochastic on your chart. Let me just, right, you can bring out anything, delete indicator, anything, and this is just the tool that you can use, okay? And anything that gives you, because I deleted the 4 hour time frame, I'm going to have to put in back my levels. Sorry about that. Let me just quickly put in these levels. There we go. And my daily and my weekly is in, when they're in the buy zone or in the sell zone together, then we're going to look for our trades. Okay, and that's as simple as how it works. Okay, so when we had here, the daily was in the sell zone, but we wait for the weekly to be in the sell zone as well. Now we have the indicators in the sell zone together. Then we just go pull out another indicator, and once this turns red, we're going to enter into the trade, and we're not going to fiddle with the trade, right? All we are interested in doing is that when this turns red, we would enter there. Okay, our stop will be above the high up here. I'm going to put that in red, right? And then we focus on selling, and as the market moves in your direction going down, as you can see here, it went down, it was in consolidation a bit, but then it started to going down. So as the market moves in your favor, okay, you're going to move your stop loss into profit, okay, so that you have no risk on the trade. All right, and then you focus on buying until the market moves from the sell zone into the buy zone, even if it reverses. So like here, it was going down and then price reverse and start going up. Just make selling your focus. You know why? Because the market is eventually going to give you that major drop. Here's a major sell there, right? And you got another sell opportunity here, and then here was where the ultimate drop started taking place, right? From here, when this turned red up here, it just began to fall, right, until the market entered into the buy zone down here, right? And you make that your focus, right? Likewise with any time frame, right? Any chart, okay? Here was a good example. Here's a good example. We have the weekly and the daily stochastic in the sell zone, okay, right? Even if the market continues to go up, wait, right? This did not change to red, so we would not be selling it, okay? And even if you enter and you entered too early, your stop will protect you, right? So even if you have to take a loss, a small loss, that is fine. But eventually when the market turns, as it did here, and this would have been your first entry, right? And then you put your stop above, somewhere above, right? You just sell the market, sell the market, sell the market until the weekly stochastic, which is this red here, reaches into the buy zone and you stop selling, right? This is how it works. Okay, so I am gonna, on my next video, I'm going to be demonstrating how to do this properly. We're going to look at current setups, like what is happening right now. We're going to follow this trade, because as you can realize, our weekly and our daily are in the buy zone. Okay, so our focus is on buying, and we know that we're getting in at a low price, right? And then if we just focus on this, it has turned blue, so that would be our entry. So right now, this is an exact setup to buy right here, right? Let me show you how this will work, because this is happening right now. If you want to take this trade, you can take this trade right now. Buy right there, okay? And your stop will go below the most recent low. You're going to just put it probably about 10-15 pips below the low, so this will be your stop. I'm going to put that in red. That will be your stop. And your take profit, right? You can allow this thing to run. You can use a 1-to-2 risk to reward ratio and take your profit. You can use a 1-to-3, whatever the market will give you, right? But I can tell you, this is a great setup that it could run. If it runs all the way to this high here, that would be 500, around 517 pips, and you'd be risking 143. Okay, so 517 divided by 143, that would be a 1 to 3.5, 3.6 risk to reward ratio. Okay, so that is more than a 1 to 3. That is an excellent trade, right? Even if the market comes down, you enter the trade and you get stopped out. Okay, wait for it to change back to blue. If you get stopped out, it will have changed to red, right? Wait for it to change back to blue and go ahead and take the trade again. Okay, so this is how this strategy works, right? A very simple strategy, easy to follow, easy to execute, easy to obey. Okay, now we're going to be following this strategy, right, as I make more videos over the next few weeks, because this is a setup that I am watching, right? And it is a great setup. Okay, so in the description below in this video, I'm going to provide a link to my Telegram channel. You have to join the Telegram channel, right? It's a free channel, but you have to join the Telegram channel. I post free trades in my Telegram channel. I give free market analysis. I tell you the pairs that I'm looking at. So join the Telegram channel, right? In the Telegram channel, I'm going to be providing this indicator, right? And right, if I'm feeling generous, I will also provide the particular indicator that I use for my entry. Okay, so we watch this video, make sure that you understand the concept, why we're doing what we're doing. Whenever we look to trade, we need to have a directional bias. Am I going to buy or am I going to sell? Once you can determine whether you're going to buy or whether you're going to sell, you then want to ensure that you are buying low if you're buying, right? And you're selling high if you're selling. Now, if you're looking to buy and the market is at a high price, then wait until it gives you a low price. And if you're looking to sell and the market is at a low price, wait until it reaches a high price, right? It's always important to buy low and to sell high, right? Because that's how the universe works. Buy a thing low, sell it at a high price. Okay, so that is the focus. And if you will do this and be diligent in it, right, you'll see how this works, right? It worked last 2 weeks right here when we were in the buy zone, right? Notice that the indicator was red, right? All we need to do is to be patient and wait for it to turn blue. And when it turned blue here, we'd have got in. When the indicator turned blue here, our stop below, and then we just let the trade ride and go up and up and up. Okay, that is as simple as it gets. Simple forex strategy for making money. Okay, so subscribe as always, give this video a like, that will help greatly. Join the Telegram channel, and I will see you. Look for my analysis and for my next video. This is Ed FX Trader signing out. Peace.